The bubble of everything has led to the burst of everything. When we heard everyone saying that it was a great idea to implement negative rates and to massively increase money supply well above the general gross domestic product growth, everyone thought that, or at least everyone in the mainstream thought that it was a great idea. Fantastic, because it was proven. This time it was going to be different, that it was proven that money creation would not generate inflation. It did. It generated massive inflation. And then the increase in valuation of sovereign bonds, investment-grade bonds, private equity, venture capital, tech, non-profit tech, cryptocurrencies, energy companies, it didn't matter. Everything just continued to rise, and everybody thought that valuations would just extend forever. Multiple expansion was the norm, and the market seemed to be extremely happy about a new paradigm in which the decorrelated assets were moving in unison, in which bonds rose at the same time as equities, and in which valuations didn't matter anymore. It was the bubble of everything. Then inflation creeped in. And inflation was not transitory. And inflation was not due to supply chain disruptions. And inflation was not due to the Ukraine war. And inflation was not temporary and certainly became persistent. And with that came the burst of the bubble, which started with sovereign bonds, continued with equities, followed with cryptocurrencies, technology, and in general, venture capital, private equity, real estate. And now we have a banking crisis. And we have a banking crisis because the balance sheet of the banks has been filled with unprofitable and completely worthless, in some cases, assets. First, because they said, oh, let's lend at virtually no return, no problem. That will be compensated with investments elsewhere. Let's invest in risky activities. Okay, that will be compensated with large sovereign bond portfolios. Okay, let's put some more leverage. At the end of the day, interest rates are going to be low forever. But interest rates started to rise. Inflation made sovereign bonds as volatile and as risky as the most volatile and risky investments. Those investments in non-profitable, socially responsible, ESG, technology, all those things started to be wiped out. The bubble of everything became the burst of everything. And the balance sheet of the banks started to vanish, like the episode of South Park. And it's gone. Just happened almost overnight. Almost overnight, despite an increase in rates that would help the profitability of banks. It doesn't matter when the asset base is already filled with non-profitable assets. So all those people that said that banks should not use economic and just purely monetary valuation metrics and lending metrics, that they should be thinking about the future and thinking about saving the planet, that should be thinking about lending to governments. All those people that thought that creating money would generate no problem whatsoever and that governments can issue all the deficits that they want because it creates reserves for the private sector. All of those have destroyed the economy now. That's what you've done. That's what you've done with the acquiescence of so many so-called experts that have led the entire financial systems to a situation that now seems mildly manageable, but that can become one of the worst crises since the 2008 one, which was already a massive financial crisis. This is what you have done. So rate hikes have not created a crisis. Rate hikes have not done the damage. The damage was done by massively increasing money supply, constantly lowering rates, making it even cheaper to borrow massively and take elevated risks for lower returns. And now we're paying the consequences. You said that we had to print money without thinking of the consequences and deal with them later. These are the consequences.